One of the biggest misunderstandings in trading is believing that success comes from certainty. Most beginners are not looking for probability, they are looking for guarantees. They want to know what will happen next, where price will go, which trade will win, but markets do not work that way. Welcome to the phantom trader world, where clarity comes before execution. Trading is not about knowing the future, it is about working with uncertainty, and this is where probability comes in. Probability is not prediction, it is not confidence, and it is not accuracy. Probability is acceptance. Acceptance that no single trade matters on its own. Acceptance that outcomes are random in the short term. Acceptance that control exists only over process, not results. Every trade you take is just one event inside a long sequence of events. On its own, it means nothing. A single loss does not mean your idea is wrong. A single win does not mean your method works. What matters is repetition. Probability only reveals itself after enough trades are executed under the same rules. This is where most traders fail. They judge systems emotionally, not statistically. They change rules after 2 losses. They increase size after 1 win. And by doing that, they destroy the very thing probability needs to work. Consistency. Professional traders think in samples, not outcomes. They do not ask, will this trade win? They ask, does this trade belong to my system? Because once probability is on your side, results become irrelevant in the short term. This is why 2 traders can take the same strategy and get completely different results. One follows the rules, the other interferes. Probability cannot protect you from emotional decisions. It only works when execution is neutral. Another mistake is confusing probability with complexity. You do not need advanced math. You do not need formulas. You need understanding. If a setup works 55% of the time, that means 45% of the time it will fail. Those failures are not errors. They are expected. If you cannot emotionally accept that number, you cannot trade that system. Probability does not reduce losses. It gives them meaning. Losses are no longer personal. They are just part of a distribution. This is also why overtrading is so dangerous. More trades do not mean better probability. If they are outside your rules, probability only applies to controlled behavior. Random trades create random results. Structured behavior creates measurable outcomes. Another important point, probability requires time. You cannot judge it in a day. You cannot judge it in a week. Trying to rush probability is like judging a coin after 2 flips. Markets punish impatience. They reward those who allow probability to unfold naturally. And this brings us to one of the hardest truths. You can do everything right and still lose money in the short term. That does not mean trading is broken. It means probability is working. If that idea makes you uncomfortable, trading will always feel stressful. But once you truly understand probability, something changes. You stop chasing certainty. You stop reacting emotionally. You stop needing to be right. You focus on execution. And when execution becomes stable, results eventually follow. Not because you predicted the market, but because you respected its nature. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.